This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Now let's take a look at the gold market. Well, guys, in fact we have the short-term setup, and we could say in the scalp setup here, and longer-term setup. On the longer-term setup, we have discussed a million of times already. I am speaking about this potential reverse head and shoulders pattern, and the chances of its pairing still here. It's still possible. While in the shorter-term perspective that we will dedicate the current research stands this bullish stop grabber. So you could say that we've got this bullish pattern that theoretically suggests the taking out of these highs at minimum. And if you will point me on this pattern, you will be right. But this pattern is very tricky. On the lower time frame charts, you will understand why I'm thinking so. And personally, I have not much desire to rely on this pattern. The invalidation point of this pattern stands right here at these lows. Well, and here's why. First of all, well, in general, if we will speak about this pattern in its minimum target, if even market will hit this target and clear out of these highs, it will not totally erase the possibility of the appearing in the head and shoulders, because that target stands inside of our resistance cluster. That is the confluence resistance on the daily time frame chart, 1280, 1290, weekly pivot resistance one. Okay, and from the larger scale, from the daily point of view, this pattern looks more tactically rather than strategically. So that's why, if even it will work, probably we will not need to refuse the idea of the head and shoulders pattern. Speaking about the tactical point, from the tactical point of view, and purely about this pattern, if we'll take a look at the lower time frame charts, you'll see the very interesting moment. So first of all, also guys, recall that now we have the deal with this bearish engulfing that is still valid, because invalidation point of this pattern is right here, right at this top. And until market will not take it out this top, we have the short-term bearish setup that was appointed by this engulfing pattern. Okay. Now what we see now on the 4-hour time frame chart. Here we've got this ABC top pattern, ABCD extension, that is based on this engulfing, that has two targets. First one is 100% extension, stands right here. But what is more interesting, that 1618 extension of this pattern stands at 1220 area, the area where the valley of the potential right shoulder should stand. Okay, so if market will reach this area by this ABCD extension right to this 1220 area, we could get the bottom of the right shoulder if this extension will work. Second moment, and particularly why I do not want to rely much on this pattern, is because if you take a look at the hourly time frame chart, take a look at the price action that has happened when this pattern has appeared. So let's see. That was the pattern of the engulfing pattern. That was the thrust of the engulfing pattern, right to the 618 area that we have specified yesterday, and that was the retracement right inside of it. Okay, so when the market has formed this pattern, formed this swing up, it already has shown this retracement down, and that should be the continuation to the upside. And if this top grabber pattern would work, this starting process to the upside has to start it right from this area, because that was the retracement. That should be extension and continuation to the upside. But this hasn't happened. Instead of that, you can see that market has shown first return right back down, taken out with these lows, and this could become the inability of the market to proceed higher with this pattern. It could mean that the engulfing pattern is dominant and overruling this potential stop grabber. That could be the situation that we have now on the gold market. That's why I can't exclude the possibility that this pattern could work, and if you really would like to take the position in favor of this pattern, that's excellent opportunity, because here you have the low risk. Here you have the approximate 1257 and validation point 1248, just approximately $10 per contract. So that's not very big move if you will set your position accordingly to this risk, but the profit is right here. It's above this high. So if you would like to take the position, that's the perfect situation. But I just warn you, and keep in mind this, that I think that speaking from the point of view of the market mechanics of the stop grabber, the second return right back down is not quite logical right now. So the first retracement is absolutely logical. So retracement and upward continuation, that's great. But this one action could tell us, could be the first sign, the first bell on the hand, or call it as you would like to, could be of the potential downward action based on the engulfing pattern, on this ABCD pattern. That's why I am not very fascinating with this bullish stop grabber pattern. So be careful of this, and just keep in mind this one. And in the short-term perspective, we should keep an eye on this potential ABCD pattern, and maybe if market will show the breakout of this trend line, this trend line is still our major beacon. If market will break through it, that will be the halfway to the appearing of the right shoulder of the potential reversal pattern on the daily time frame chart. So let's keep an eye on it. But guys, I absolutely have no objection against the taking the long based on the stop grabber. I just show you the possible risks that you meet not very often. So this development and this situation is not obvious. It's not very typical for any stop grabber that you could meet on the market, you could get on the market. But this is particularly a current special case. That's why the risks that I see, I just would like to show you, and maybe it will shed some light on your view on the market. Maybe you will see something else from your analysis point of view. But personally, I do not want to rely much on this particular pattern on the daily time frame chart, because it has a solid probability of the failure. It really could fail. Still, if you would like to do this, you could take the position, but maybe it makes sense to just reduce your common position a bit, maybe have the half of the usual position, make some other changes. So just keep in mind this potential risk that we have just discussed. Well, speaking about other things, well, in general, we still stand around this big pattern, and we'll continue to watch over it, because it has some confirmations and support from the higher time frame charts, from the monthly and weekly time frame. That's why it's just not just the pattern on the daily time frame chart. Well, I know we will see what will happen in the nearest future with it, because it has really significant potential, and it can put the foundation for the trading on the gold market for the extended period in the medium-term perspective, because the target of this pattern stands at 1360 approximately. That's really could be significant action, and this pattern is worth of our attention.